So, if you're going to be retired for 30 years, statistically speaking, you're going to have one bad decade, one okay, and one good decade. And the order of those decades is the most critical thing, right? So if you've got the bad decade at the beginning, oof, it'll really mess up your numbers. Welcome to Wealth Creator Radio, where we help people overcome the uncertainty of having enough retirement income. I'm your host, Eric Heckman, a certified financial planner with over 30 years of experience. We want you to enjoy life and not have to wonder where your money will come from and how long it'll last. My mission is to show you how to develop a personalized income plan so you can retire more and have worry less wealth. Here at Wealth Creator Radio, we cut through the noise and get straight to what matters. We understand that the world of retirement planning can be filled with confusing products, ever-changing tax laws, and volatile markets. That's why we're here to help successful people like you navigate the uncertainty and create a blueprint for a thriving, work-optional life.
So the economy is shrinking, inflation just won't go away, trade war talk still going on, but somehow the stock market is up. What should we make of all of this? Eric Heckman, president of Heckman Financial and certified financial planner, is here today to help us make sense of all these things and show us some opportunities we might not want to miss. So let's start off by giving you the phone number that you need as we get started. 800-454-1184. You may call that number or you may text that number for an appointment. Get on their calendar because you know what? It is complimentary. The other thing you're going to hear us talk about is the toolbox. It's a digital toolbox that you can get, and it has Eric's book in there, plus some other wonderful resources. So you can text the word toolbox as well, 800-454-1184. All right, Eric, so excited to get started. Great to be here with you today.
Yeah, no, it was great. Good time to be talking about all this craziness, right?
Yeah,
So,
right? Oh my gosh.
yeah. So what's going to be happening, right? How do you read the tea leaves, or how do you get your crystal ball to turn on?
Yes.
So I mean, one of the things that recently happened, which I love, is I actually had one of the listeners, send some comments in, and it's great. It's good to hear from people, and
Yeah.
and anything's good, right? So
Yeah, we always want
and
feedback.
she didn't, yeah, right, but she didn't like the fact that I didn't say nice things, I guess, on one show about Elon or something, or I criticized him or something like that. And well, that's fine. I didn't vote for Elon, and neither did the Senate or anybody else. But
Mhm.
but no, I mean, yeah, it's great if you can kind of make government more efficient, and we'll see if that works out. But really, the point of that, and that's the sad part, is people are so like, whatever you want to call it, they're so invested with their celebrities and
Mhm.
their ideologies that they just can't even discuss things anymore. And I mean, I remember being for a while, I was in an international debate thing in high school and stuff, and that's when you actually talk to people and you could criticize each other without saying that the person's evil or
I
something,
know, right?
right?
Yeah,
You could
we
just,
can't debate
yeah,
anymore. You're right.
yeah, you can't talk. You can't have real discussions. It's sad that people are
Yeah.
so thin-skinned, I guess, or whatever whatever
Mhm.
good term it
I
is.
don't
But
even know what it's called. Yeah, yeah.
yeah, they're so invested in
Emotional.
their
So
celebrities and
emotional.
emotional about it,
Yeah.
and this show's about personal finance, and the point of that whole conversation was the fact that if you're putting money in a 401k, an IRA, anything that the government can tax you on later, those tax rates have to go up. I don't care, who anybody's talking to. I mean, right now we're spending 122% more than we make as a country. We've been doing that for years. Did that through the Trump presidency, did that through Biden. So both of them, it's not been since the 90s since we balanced our budget. And, the Republicans, well, Trump's budget doesn't seem like it's headed towards any sort of balanced budget yet either. And same with the Republicans. So, yeah, if you keep putting on stuff on the credit card and more of your personal taxes are going to pay the interest on the debt, not principal, just interest only, at some point, the only way that come out of this is they have to raise taxes. And so if you've got a whole bunch of money in taxable accounts, that could be hazardous. So
Right.
that was the point of that discussion. Whether or not you like Trump or Elon and stuff like that, doesn't matter. It has
Right.
nothing to do with this discussion. It's just a matter of economics. And if you know in your own heart, if you're spending more money than you make, there's going to be a problem at some point.
Yep,
And that's what
exactly.
we're doing as a country. So,
Yeah.
yep. So, how can you protect yourself?
Yes. Okay.
And
Well,
that's what we're
thank
here
you.
to talk about, right?
Yeah, yeah, exactly. That's what we're always here to talk about. Thank you for clearing that up, Eric. Thank you so much. So, yeah, we are having so many mixed signals about the health of our economy. How are you, relating with your retirees and your pre-retirees and helping them create this reliable income stream that can last? It's going to be designed to last their entire retirement.
Yeah, no, definitely. It's a critical thing to be looking at. And I always tell people that if you look at like decades, 70s was not a great decade. 80s was pretty good. 90s was great. 2000s was pretty bad. Had double recessions and double stock market crashes. 2010s were pretty good, right? So, if you're going to be retired for 30 years, statistically speaking, you're going to have one bad decade, one okay, and one good decade. And the order of those decades is the most critical thing, right? So if you've got the bad decade at the beginning, oof,
I know.
it'll really mess up your numbers. So
Yeah.
yeah, I mean, one of the things is, you've seen a lot more layoffs. We haven't even seen all the tariffs and all the. I saw one study that every federal job loss is equals to about two other job losses in the private sector because of
Hmm.
when they're spending that money on something, they're spending it on some company that hires people, right?
Right.
And so we haven't seen all this stuff kind of trickle through. I think it won't be till probably the fall that we'll see really how good or bad things are, and
Right.
that'll be kind of the telltale signs. So yeah, it's one of those things where if you're retiring or about to retire, you need to have a lot of money that's guaranteed, some stuff that can't go away, what I like to call foundational money. So that way that money is there. You can withdraw it if you need it, and it's going to be there for you. But if you have it all in the stock market and the market's going down, you can't just withdraw that money without taking losses. And so that's the hard part is you really need to make sure you have some of that money protected. And so one of the tools we've set up is the digital toolbox. So that's one of the things where you can go online and it's super easy. All you have to do is text the word toolbox to 800-454-1184. Again, text the word toolbox 800-454-1184, or you can download it directly at wealthcreatorradio.com.
And you are listening to Wealth Creator Radio with my friend Eric Heckman, who is local right here helping retirees and has been for the past 30 years. So, Heckman Financial is where you want to go. Make sure you take advantage of this opportunity. It's complimentary. Thank you for joining us today. I'm Luann Fulmer. We hear so much about all the risks in an economy like what we're experiencing, but there are some opportunities. So, Eric, why don't you talk about that, ways our listeners could take advantage of things right now?
Yeah, no, I mean, definitely there's, especially when the market dips, we like to have a what we call a go time account. So if you are ready to go, and want to move some money to Roth, maybe it's not a huge Roth conversion. So maybe it's 20, 30, 40,000 or something. But if you know you're going to want to do that at some point this year, and then you see the markets drop, hey, that's the time, stocks on sale, right?
Yeah.
just like going to the store, right? It's a 40% clearance or 20% clearance, whatever, yay, right?
We like
that's the
that.
time to go buy it. Yeah. And so that's when you want to convert to Roth and put that money in, pay the tax now. And then if it rebounds on the Roth side, it rebounds tax free. So you don't have to pay that increase in taxes. And, so that's one of the examples of stuff where you can kind of sometimes jump in and get some extra money going.
Mhm.
Obviously, if you're younger and farther away from retirement, this stuff probably doesn't really matter. So just keep plowing that money in and be fine. But if you're 5 to 10 years from retirement, that's when this math changes a lot. And that's when you really need to, be making sure you have good plans.
Exactly. And that was going to be my next question. If someone's feeling a little unsure about their next steps, then, getting with someone like you, a professional, can help settle their nerves.
Yeah, no, certainly. So there's the foundational side of the world where the money's guaranteed. There's some crazy good options out there right now. There's some companies that'll give you huge day one bonuses of anywhere from 14 to 20%.
Oh,
Of just cash bonuses where that money is real money. It's not stuff that you have to take out over time or it doesn't have a ton of strings attached to it. And you do have to have the money there for a little bit, but you can still start taking it out the next year and such. So there are some ways to protect your money from loss, still have a good upside, but even better, even get some money, in your pocket day one. So, again, that's something that, if you want to take some time and look at this, you can look at the report. Will my money last as long as I do? When should I time Social Security? Copy of my book, Worry Less Wealth, or even a way to set a time to meet with me, Eric Heckman. All you got to do is text the word toolbox to 800-454-1184. Again, text word toolbox, 800-454-1184, or download directly at wealthcreatorradio.com.
If something's worth doing, it's worth doing right. There's a particular time of life this phrase couldn't be more appropriate. How can you know you'll live the retirement you've always imagined? After all, life can be so unpredictable. You've worked hard and saved. Watch your accounts go up and down with the market. Your advisor says, don't worry, you'll be fine. But you still don't feel confident. Eric Heckman at Heckman Financial has a checklist to help you find out if you're on the right track for retirement. If you can check all the boxes with confidence, you may be ready for retirement. If not, Eric can help you address any potential costly mistakes. To get Eric Heckman at Heckman Financial's complimentary checklist, call or text LIST to 800-454-1184. Call or text LIST to 800-454-1184. Firm offers insurance services. Investment advisory services offered through Heckman Financial and Insurance Services, Inc. Investing involves risk, including the potential loss of principal.
I'm Lou Ann Fulmer here with Eric Heckman, president of Heckman Financial. So happy to have you along with us today. Many of us spend decades preparing for retirement by diligently saving in those 401ks, and we get to watch it grow and we feel so good. But then as retirement approaches, things get a little challenging. Here's what happens. We have to actually transition from saving in retirement to now collecting our own paycheck every month in retirement, right? So that can get a little scary. We have to create that retirement paycheck on our own that has to last a lifetime. So Eric, that's what I want to talk about right now. What makes this transition from saving to spending so challenging for so many retirees?
Yeah, well, it's a scary thing. I mean, it's amazing how many clients I have that just kind of just emotionally almost have issues or whatever you want to call it.
Yeah.
Because it's kind of like you're driving up a mountain road and all of a sudden you're doing a U-turn and going right back down, and in the middle of the road with not much there, and you don't know who's coming around the corner when you do this U-turn. And
Yes, right. Yeah. That's so good. Yeah.
And you were told for 30, 40 years, don't ever take money from your retirement account. Don't take money from your retirement account. And what now you're supposed to do it? And
yeah.
When I show people it's totally in your head. And when I show people on the income plan, there's red coming out of their accounts because it's red is coded as withdrawal. It's just amazing how many people just go, why is that red? It's like, well, that was the point of saving, because you don't have money. You're short and you have a gap, and the gap comes from your retirement assets. So, I mean, I just recently had a meeting with some clients that they're not quite he's about to retire and she's going to retire at the end of the year, but they just wanted to know, like, how do we actually get the money into our checking account? So just like literally, I mean, do we just set up a transfer? And so we had to kind of go over that. And and it's we'll withhold taxes. So it's like your paycheck where they withhold taxes. And, it's kind of one of those things where, we do this so often, you can almost forget just the simple basic stuff.
Is it automatic, Eric? Is it? Do you set it up? So, I mean, I don't know.
For most clients, we'll find whatever automatic amount they want. And then sometimes it's, whatever, they just went on a big trip or something, or need something for the house. So, okay, we need another 10, 15 grand. Where's that going to come from to pay the Visa bill or something?
Gotcha.
Right. So, but normally you do want to set that up as an automatic payment, but it's scary. And so one of the biggest things you need to know is what's the real number that you're going to spend. What is that withdrawal amount that you're going to really live on, not the one that you tell yourself, but the one you actually spend. So that's when I like to do the no BS budget. And that's where you take your last 12-month bank withdrawals. So you look at your bank account, add up all the last 12 months, and then divide that by 12. And that's how much you spent. You don't even have to look at your credit card, because assuming you're paying your credit card off every month, hopefully you are, from that checking account, you don't even need to look there. It's just all there. So, that's one of the big numbers, because once you have that number, then you can figure out, okay, how much do I need to take out?
Okay, very, very good. All right. For many years, financial professionals have always talked about, following that 4% rule with retirement withdrawals. But, in talking to you here recently, I understand this approach is probably not quite adequate for today's economy, right? So, talk about why this rule of thumb might not be the right strategy and people could fall short in retirement today if they did use that.
Yeah, well, what was his William Beggin, I
Yeah.
think is something like that.
Yes,
Back in
yes.
1994, 92, somewhere around there, right when I
Mhm.
was actually starting in the business, that's when he was credited with this rule, and it was a very different time. Bond rates were really high. He was doing all about the market, and people's longevity was a lot lower. I mean, we're talking 30, 35 years of medical technology that now people live a lot longer than they do even just in that short time frame.
Right, yeah.
And so one of the things that a lot of subsequent studies have shown that is you need some sort of guaranteed money. You need something that's going to always be there because, yeah, if you hit these downturns, and of course, back then when he was doing his analysis, there was no such thing as a negative 38 year in the S&P, but we had that in '08. So
Yeah.
that wasn't even in the calculations, these huge drops, because there hadn't been any like that. And so that's one of the things that you have to watch out for is, is that really a safe rule? Does that really work? I mean, one of the things also is back then there was a lot more dividend paying stocks. Now with a lot of the high tech companies that don't pay as much dividends, the dividend yield's gone down a lot. So if you're looking at the S&P 500, its dividend yield averages around like 1.25%. So say you need 5% to live on. Well, then that means that other 3.75%, you are hoping the market goes up by that much so you can sell that stock off. And if you need 7 or 8%, now you're hoping for a lot bigger growth. And if it doesn't happen, guess what? You're selling shares. You're locking in the
Mhm.
losses. They're going to go away. Those shares go away. You take that loss, you take that hit. So what you really need to have is some steady income money, some money that pays you good dividends, really high dividends. And then you also need some foundational money, some money that is guaranteed where it won't go away. It's going to be there for the rest of your life. And that would be then your baseline. And the market money is more the extra money, the fun stuff, right? The trips to Europe, the riverboat
Yeah.
cruise, the Machu Picchu, or whatever fun stuff you were trying to do.
Yeah.
But that's opposite of how most people are taught. Most people are saying, oh, take it all out of the market because Wall Street wants you to leave your money there. They want to get their
Mhm.
fees, right? So
Yeah.
they don't want you withdrawing.
No, they don't. They don't.
No.
Now, so many retirees are surprised by how taxes impact their retirement income. And I think that's kind of interesting. You've brought that up a lot on our show. Talk about how these tax considerations should be factored into someone's retirement income strategy.
Yeah, no, certainly. I mean, I would think pretty much every single live event that we've done, whether or not it's our movies or dinner programs or educational events, any of these, pretty much every time I get somebody who says, your 401k you have to pay tax on when you take it out. It's it's
Oh,
amazing,
I
and
know.
nobody
Yeah.
thinks about it or talks about it,
No,
and
I
then
guess
of course
not.
everybody told you you're going to be in a lower tax bracket in retirement, and
Hmm.
none of my clients have found that magical lower tax bracket area pretty much. So they're not finding that to be as true as it thought because you haven't take out all this money, right? So
Yeah.
you're having to take out all this taxable money that now it's time to settle up, time to pay up, and get that check to Uncle Sam and
Yeah.
and stuff. So taxes are a critical thing. Nice thing is now you don't have to take your money out of your retirement accounts till 73 or 75. It used to be 70 and a half.
Mhm.
So now, depending on your age, it's a lot higher. So it gives us more time if somebody doesn't need all the money. But yeah, one of the things is looking at Roth conversions, just putting money, regular money into stuff that is tax efficient or ideally tax free. There's some other options you can do there. So yeah, you really, really have to pay attention to taxes because you can make 1 or 2% more, but if they raise taxes 5% in retirement, guess what? That 1 or 2% more, doesn't compete to 5% more tax on your entire bucket of money.
Yeah.
And that's the scary part. So yeah, taxes are the most critical and yeah, it's one of the things that drives me nuts because of there's so many people in my industry where you go, my financial advisor, I asked him a question about should I be doing Roth conversions, and he said go talk to my tax advisor, and the tax advisor says, well, go talk to your they do this back and forth thing, which is
Yeah.
it's goofy, and
Yeah.
it's like nobody wants to help, and it's like, come on, take some control, and you both know about taxes, you should know about these things, but
Yeah.
a lot of them aren't licensed. So what we did is we actually do taxes here. I'm actually licensed to do taxes. So that
Yes.
way we can give people that critical advice. Cause yeah, if I'm talking about your IRA, your dividends, your capital gains, I mean, everything I'm talking about is tax related. And when you take that money out, that's all it's about is taxes. So,
Yeah.
so that's the critical thing. So, yeah, I would definitely recommend if you want to take some time out, you want to learn a little bit more. We actually have a white paper that really quick read, about 10 to 15 pages of, am I paying too much in taxes in retirement? What's the Social Security timing decision? Will my money last as long as I do? All these critical things, and we put them all in the toolbox. And all you have to do is text the word toolbox to 800-454. 1184. Again, text word toolbox 800-454-1184, or download directly at wealthcreatorradio.com.
Be sure to like and subscribe to Wealth Creator Radio so you can stay up to date on ways to build your wealth and create a retirement you and your family will enjoy for years to come. Like and subscribe today and create your wealth for tomorrow with Wealth Creator Radio.
Hi, I'm Luann Fulmer here with Eric Heckman, president of Heckman Financial. The prospect of retirement brings about some wonderful, exciting emotions, but then also concern for many Americans. We're all living longer, and, one worry that stands out above the rest is, will my money last as long as I do? And we worked so hard for that money, we don't want to see it dwindle away. So, Eric, let's talk about strategies that you introduce to retirees that can help them create reliable income streams to last a lifetime.
Yeah, no, that uncertainty, the under-resourced type of thing. Do I have enough money? Will it last? Hands down, always the number one fear, and one that really never goes away, right? Because
Sure.
my whole process is talks about worry less wealth, because you'll never be worry free. So my
Right,
goal is
that's
just to have
good.
people worry.
Yeah, just
Yeah, we can make you worry less, but
yeah,
you're kind of, yeah, you're living in some sort of la la land or whatever if you think you're going to be worry free, because
right.
you better have a lot of money saved up and
So
all
true.
guaranteed or something. So so for most of us, that's not the case. So
Yeah.
okay, what are we going to do? How do we make sure this money does actually last? Well, the scary part is I don't know how many. I mean, most people don't have any sort of income plan, and that's kind of like you're going down the freeway with no clue as to where you're headed, and you hope you get there. It's like, well,
Yeah.
if you don't know where you're going, how are you gonna know you can get there and such, right? So I think the first and foremost thing is just having that income plan. So that income plan has a couple different things. It has, obviously, you have some stuff that hopefully Social Security, there's a lot of threats against it, but hopefully it sticks around. Most of us don't have pensions. So
Mhm.
that's kind of, Social Security is for most people about our only floor of income. So that's only like baseline income that you're getting.
Yeah.
And so if you're, say that's just to keep the math easy, say that's 2,000, but you spend 7,000 a month. Well, that means you need to make up 5 grand from your own savings, from your own investments. And, that can be scary, because if all of a sudden
Mhm.
you have a '08 meltdown, .com crash, all these different things that happen, how much is that going to delay you? Or because you can't just hang in there type of thing, because you need money every month. So
Right. Yeah.
yeah, so you're stuck. So yeah, having some sort of income floor that's a little bit higher, that's where you can have some guaranteed things from different insurance companies that you can actually have some money set aside. And say you get that up to $3,000 or $4,000. Well, say four, if you got it up there, well, now you only need a $3,000 gap. Well, that's a lot easier to offset with dividends and interest and other things without even having to sell stock in those bad years. So, again, that's where you want to have a plan, because if you have no plan, I have no idea how you could ever feel less worried. I mean, I'd think you'd be
Right.
always worried,
Right.
but with a plan, at least now you go, oh, well, okay, right now everything looks on track, and
Yeah.
and it changes years. So you do have to update it every year too. So it's not something
Mhm.
like one and done either.
Right. Right.
So
Right. Yeah. You have to
yeah.
update that for sure. Okay, so let's get into the factors then that people need to think about when they're trying to evaluate all the different income generating options for their retirement.
Yeah, well, I mean, so there's two things, right? One, we talked a little bit about market volatility.
Yep.
So you can't have it all based on the market. So you really need to make sure you have three types of money.
Hmm.
Market money is what you have in your 401k, the stocks, bonds, all that stuff. But you need to have some high dividend stuff that's ideally low volatility but pays high dividends. So that's giving you some cash flow right away. So that's money you can withdraw either every month or every quarter, every year, however you need to take it out. And then also you want some foundational money, some stuff that's going to be able to earn 5 to 7%, but have no downside risk. And so once you have that money, you could be taking most of the money out of there, again, having that income floor. And then, now you already lowered your risk down a lot because you don't have to sell stuff as much. But then the other part people forget about is the taxes. And so that's one of the things that you're mentioning there is what's also the tax implications of that income, right? So,
Yeah.
so if you're taking it from Roth, if you're taking it from 401k IRA, if you're taking it from regular money, they're going to all have different tax ramifications. So the weird part in retirement is you get to pick your tax bill, which people don't understand until they get there, and then they
Yeah.
finally go, "Oh, now I get what you're talking about." But
Yeah.
but when you get that W-2, there's not much you can do tax wise. It's taxable, right? So that you just pay the taxes. And there's not a ton of work you can do. But once you're retired, if you take money from IRA, 401k versus Roth versus regular funds, that's all going to massively change your tax bill. And you can't figure this out in April because it's too late. You took
Right.
the wrong monies out. So you actually have to figure this out in December the year before, or even January, February of that year to start planning that out and making sure you have that right amount of money coming out. So, I mean, that's one of the things is having some education, knowing what's out there. So one of the things we set up was this digital toolbox that you can get some great stuff. You can get things like, will my money last as long as I do? Social Security timing decision, and am I paying too much taxes in retirement? Even a copy of my book, Worry Less Wealth, or set a time to talk with me, Eric Heckman. All you got to do is text the word toolbox to 800-454-1184. Again, text the word toolbox, 800-454-1184, or go online to wealthcreatorradio.com.
We make it that easy for you. And remember, all this is complimentary, guys. So happy to have you along with us. We want to make sure you can take advantage of some of these things that Eric is offering you. This is Wealth Creator Radio with Eric Heckman. He is president of Heckman Financial and also a certified financial planner. So, as retirees, we're always looking for, ways to enjoy our retirement years, fun things to do. We don't want that constant worry about, oh, the market's fluctuating and, the whole big worry about running out of money. So, Eric, talk about how this comprehensive retirement income plan, this is what you do when you create this blueprint for retirees. Talk about how that helps provide them financial confidence and a sense of reassurance.
Yeah, no, I mean, once you have that plan, so there's five components of the plan that everybody needs these five areas solved for. So
Mhm.
first and foremost, like we talked about already, is income. You got to have that income plan, and you have to update it every single year. And it needs to have taxes included in it, inflation, everything. So yeah, net numbers, the net spending and growth and all that, and look at how will it really work, and will it last to age 100 or will it last to age 75?
Yeah.
Because 75, you might need to do some changes, right? So
Yeah. Needs some
age
work.
100 or 95, you're probably okay. But so that's one of the first things that we want to look at. Then, of course, how do you invest that money to get that income? Because most people, they're usually, when I do a portfolio analysis, their average dividends and yield is about 1 to 1.5%, which is not much money. And that's fine while you're working. But once you start needing to take the money out, yeah, you need to have that 4, 5, 6% withdrawal amount. So where's that going to come from? Right. And so, yeah, you need to have that. And then also, of course, taxes, income, investments, taxes, they're all very much buddies. They always hang out together, and they're very
They're
interrelated.
so
So
tight. Yeah.
yeah, right. And so yeah, so they're I guess the three amigos maybe or something, right?
Yeah. Yeah.
So you got to have that all planned for, and because yeah, again, if you take out more money out of one pot of money, that's causes more taxes. That lowers your income. That lowers your returns. There's a lot of things that go into play. Obviously, you need to know about healthcare issues, pre-65, post-65, long-term care. And then lastly, legacy. Who's going to get your stuff when you're gone, right? So those are the key places to be always planning for. And, that's really the critical part, in any sort of plan.
Right. So if someone's unsure that whether or not they're on the right track, you're offering second opinions, right? You would give them a second opinion on their current strategy.
Yeah, no, yeah. For no cost, we'll go through, set up a 15 to 30-minute phone call, find out what your concerns are. And if it makes sense, we'll even go do the entire blueprint for you for no cost, no fee. And, so it's just get you that information, figure it out. And then at the end of that second meeting, that's when we decide if we want to work together. So, again, all you have to set up that time, all you have to do is text word toolbox to 800-454-1184. Again, text word toolbox, 800-454-1184, or download directly at wealthcreatorradio.com.
Imagine for a moment that an intense storm is pounding your house. Will the roof leak? Will the siding peel away? Will your basement flood? If your house is properly built and maintained, you'll be fine. But what about your 401k or your investments? The stock market has had a great run the last few years, but is its current turmoil making you feel uneasy? Are you confident your portfolio is built to weather the financial storm? Now may be a great time to have your retirement plan inspected. Call Eric Heckman of Heckman Financial at 800-454-1184 now. Eric will examine your portfolio and show you if your investments are in need of some weatherproofing. Call Eric Heckman of Heckman Financial today at 800-454-1184. That's 800-454-1184. Investment advisory services offered through Heckman Financial Insurance Services, Inc., a registered investment advisor.
Good morning. So happy to have you along with us today. I'm Lou Ann Fulmer here with Eric Heckman. I want to mention, Eric holds many events throughout the year, and you can find out those details, even sign up for them on their website, wealthcreatorradio.com. So many topics that we discuss on our show. You can meet this friendly guy that you hear on the radio every single weekend. You can meet him in person and attend one of his events, okay? Wealthcreatorradio.com. Just head to that website. All right. So you're in store for big changes when you retire, right? It's just a new adventure. The thing is, we want to avoid common mistakes that people can make in their retirement years. So, Eric, we have this list of things not to do when you retire. It comes from lovetoknow.com. So it's a top 5. We're going to kind of go through this, and I'm sure you would love every one of your retirees to know this, right?
Yeah, no, certainly. So the first one, number 5, so it's kind of like the old school countdowns.
Yeah,
like
5.
Letterman back in the day.
Yeah.
Enjoy retirement, but don't be undisciplined. And so what this is really talking about is making sure you've got, some sort of structure, some sort of routine. Obviously, you had that when you're working, but it gets a little different when you're, just off, right?
Mm-hmm.
So it's not like a vacation day. It's more just, okay, how do I make sure, you keep this going? And, so that'd be one of the things is making sure that you stay active, keep doing stuff physically, go out, take walks, ride bikes, whatever you want to do, hikes, something to keep yourself moving.
Right. So obviously, this isn't directly related to a financial plan, which is what we usually talk about. But, you do have to have a plan for how you're going to spend your time. That's just as important as having a plan for how you're going to spend your money, right? I love that.
No, certainly. I mean, if you love to golf and now you're going to be able to golf, 4 or 5 days a week versus 2, well, how much is that going to cost you?
Yeah.
Right. And, if you're doing a lot more trips now, obviously if you're just taking hikes around near you, it may not cost you much, right? There's some stuff that's less expensive. But if you want to try to do hikes in Patagonia or some other place, right, where it's going to take you longer, you do have to have a budget for that. So that is one of those things that you do want to make sure you have a plan for. The other one would be don't immediately downsize your house, because once you quit your job and you're trying to get that new routine, all those changes can be pretty tough to handle.
Yeah. So, you should kind of take time to think that through. My husband and I have already downsized. We've already done that. And, we're not even retired yet. So that was kind of nice. We just were like, we need to just get into us. We knew we needed to get our finances in order. So we're like, all right, we're going to sell this house, and move into something smaller, which is actually, it worked out well. It was the same square footage. So we have the space, not the basement, but we have basements where I live. But anyway, we had to get rid of a lot of stuff, but it really was kind of nice, and now we're in a smaller place and more affordable for, coming up in, retirement. But anyway, that's great. Don't immediately downsize your home. What are some other major decisions people need to seek guidance on before pulling that trigger?
Obviously, a lot of people do downsize their house, but you do want to do it a little bit more slowly because, like you said, you have to get rid of all the junk, all the de-junking and stuff. And I've had some people who try to do it all at once, and it is brutal because it's just, mentally exhausting of trying to speed up and get rid of all that stuff and sell your house and then find your new place. And all that stuff at once is really tough to do, especially if you've been there 30, 40
right.
years.
Oh, yeah. You really collect.
And then the other problem, too, is I find is how many of your friends are you going to lose and not talk to or not see, if depending on where you end up moving to, right? And sometimes people pick locations that sound great. And then, I was in Phoenix or a little bit ago, and they'd had over 100 days of 100 degrees, right? So, in 1 year. So, do you really want to be there? Right. And so that's one of the things you have to watch out for. Is that place going to be the place that you really want to be? And so I also recommend go rent a place for a while and see what those places are like and where you want to move to and those things. So that'd be one of the big ones. Obviously, the other thing is, especially when you have all these assets, especially if you sell your house and you may have now more assets because you did that.
Mm-hmm.
You want to make sure you take care of that estate planning and make sure that everything's done there. So you want to make sure that all your assets are in the trust, that, you've got it updated. Sometimes your estate plan may have your guardian for your kids. Well, maybe they're in their 30s or 40s, right? So,
exactly.
if you still have a guardian, that means it's not been updated for quite some time.
Eric, that happened to us. My husband and I, our kids were in their 30s. And we're like, oh, we need to make a new will. Or their Aunt Patty's going to be taking care of them.
Yeah, exactly. So that's one of the things that you have to really watch out for is just making sure those are, maybe at least every 10 years updated. But, especially as you change things and change accounts, you want to make sure that all stays correct and stays accurate.
Eric, this is what you do. You come alongside retirees and guide them, pre-retirees, to help them make those right decisions as they move into retirement, because you want them to have a worry-free retirement. That's your goal, worry less in retirement. So talk about, this toolbox that we are offering them that has, not only your book called Worryless Wealth, which you wrote about your own experiences, but everything else that's involved.
Yeah. So, one of the biggest things is just having a plan. So if you're, 50, 55 and you're getting close to retirement, you want to be doing that plan. But even if you've already retired, you still got to get this plan going. It's kind of like showering. Just because you did it once doesn't mean you're done. And, you got to keep doing it. Right. And so, that's one of the things we want to look at is, where's your income going to come from? How long is it going to last? Where should your investments be structured now? And, where's that tax bills going to come from and how we lower that, lifetime tax? What's the healthcare issues along the way? And then lastly, what we've been talking about right there is legacy, right? Who's going to get your stuff when you're gone? And is it all set up how it should be set up? So yeah, those are the big areas that you should be, looking at. So again, all you have to do to get this access to this toolbox is a copy of my book, Worry Less Wealth, or Will Your Money Last as Long as You Do? And are you paying too much taxes in retirement? These are all great quick reads. All you have to do is text the word toolbox to 800-454-1184. Again, text the word toolbox, 800-454-1184, or download directly at wealthcreatorradio.com.
Yeah, Eric Heckman, founder of Heckman Financial right here in the Silicon Valley area. And he has been doing this for over 30 years and counting, helping retirees just like you. So we're so glad you joined us today. This is Wealth Creator Radio. Now we're talking about the top things to avoid when you retire. Number 5, enjoy retirement, but don't be undisciplined. In other words, have some sort of structure and routine so you can, keep healthy mentally and physically. And then number Number 4 is don't immediately downsize your home. Number 3, don't neglect your estate planning. All right, Eric, tell us number 2.
Yeah, number 2 is don't be afraid to try new things. And, I think that's really great advice. I've got a lot of clients that have done some kind of cool stuff. Some have gone back to, a lot of the community colleges. The classes are free. So they've taken courses, sometimes about history in other places, and then they go see those locations on trips. Some have picked up instruments. I've got a few that are actually in bands, folk bands and jazz and a couple different ones. So whatever you might want to try, just go for it, right? You got the time, go do it. And, you never know. And then sometimes that could also be true with volunteering. You could just volunteer at some place that's new that, adds a little bit more meaning. And then the last one would be just don't let loneliness creep into your life. AARP says over, 45% of people over 65 are single. They're either, divorced, separated, widowed, whatever, but it's not like you go to work and go see somebody, right? So you got to have some way to reach out. And so I would definitely make sure you get involved, stay in contact with others, not just online, but in real human form. Right. So, but yeah, those are some of the tips and tricks that you should be doing in retirement. But again, if you want access to all our great digital downloads at our Wealth Creator Toolbox, just text word toolbox 800-454-1184. Again, text word toolbox 800-454-1184, or download directly at wealthcreatorradio.com.
Thinking about healthcare costs, long-term care expenses, and income needs in retirement? How will you afford it all? And what can you do now to help ensure your loved ones will be okay when you're gone? Eric Heckman at Heckman Financial has access to tools and strategies that can help you pursue your retirement dreams without taking on too much risk with your money. Interest rates are the highest they've been in decades, so take advantage of this seemingly once-in-a-lifetime opportunity to help protect your retirement before it's gone. Learn about the tools and features available today that could provide bonuses, potentially adding up to tens of thousands of dollars in additional income when medical needs arise. Schedule your visit with Eric Heckman at Heckman Financial today by calling 800-454-1184. That's 800-454-1184. These opportunities won't last forever, so call now to help protect your future. 800-454-1184.
Hi, I'm Lou Ann Fulmer with Eric Heckman, president of Heckman Financial, where their mission is to get you to and through a worry-less wealth retirement. Now, Eric, you and I often discuss challenges and risks that exist in retirement. So it's time now I'm going to have you give us an example of someone who has experienced one of those retirement obstacles. Have you kind of explain that to us? We call it a financial fail.
Yeah. So, one of the things is thinking things will be always the same, I guess is probably the best way to put it. And, when you're working, you get that W-2 and you do your taxes at tax time, right? And you either owe money or get money back. And there's not necessarily a lot that you do typically, right? And so I had a client, Dan, he came to me right when he was turning 70 to retire. This was back before they raised the limit to now 73 for required minimum distribution, but he was going to have his required minimum distribution that same time frame. But he'd retired. He figured he'd be in a low tax bracket. He'd gotten married with his wife kind of late in life, just a few years earlier actually, and so they both had waited till 70 for Social Security. So they're getting like 80 grand of Social Security.
Wow.
The first year, only 14,000 of it was taxable. So Great deal, right?
Yeah.
But then he had to take money out of his retirement account. Well, all he had ever done his whole career, and again, he met me right as he was retiring. He was supposed to plan ahead.
Late. Yeah.
Not the day of. And, and so when he did that, everything was pre-tax. So there was nothing we could do tax planning wise. And so that next year he took out money out of his IRA because he had to, and with the required minimum distribution, plus he needed some of it to live on. And all of a sudden 56,000 of that 80,000 of Social Security was now taxable.
Oh, no.
Because he took money out of his IRA. So a $30,000 withdrawal from an IRA caused another $40,000 of taxable income. It's
Good
like, what? How is that possible, right?
Yeah.
So he was so surprised at tax time that guess what he had to do to pay the taxes? He had to take more out of his IRA.
No.
And so the next year, 70,000 of his 85,000 of his tax was taxed.
Oh my
of that
gosh.
Social Security. And again, we're not talking, people talk about, oh, Roth is for like, leaving more money to the kids, and if I don't have kids, why do I care? And, blah, 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 stuff like that. Right.
Yeah.
No. This is how the IRA, how his 401k was affecting his Social Security taxation. You don't get told about this, right? Nobody talks about that aspect of things. And so that, again, that's something where had we thought about this ahead of time, had we met 5-6 years earlier, 10 years earlier, we would have had some time to say, let's start doing some Roth stuff. Let's do some other stuff where we have some money that's tax free or tax advantage. So we don't have to jump up into these higher brackets, cause all sorts of other taxation. Thank you for tuning in to Wealth Creator Radio. I'm Eric Heckman, and it's been a pleasure guiding you towards a more confident and secure retirement. Remember, my responsibility is to always do what's right for you, our client. Together, we can cut out that fancy sounding financial jargon that doesn't help and focus on what truly matters for your financial future. If you're ready to take control of your retirement planning and build a personalized income plan, contact us at 800-454-1184 and text the word Toolbox to schedule a complimentary consultation. If you're looking for more resources and tools to build your retirement future, don't forget to check out that Wealth Creator Toolbox, your toolkit for a secure and confident retirement journey. Until next time, retire more and worry less with Wealth Creator Radio.
Information provided during Wealth Creator Radio is for illustrative purposes only and does not constitute investment, tax, or legal advice. Information has been obtained from sources that are deemed to be reliable, but their accuracy and completeness cannot be guaranteed. Always consult with a qualified investment, legal, or tax professional before taking any action. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Individuals should thoroughly review the contract for specific details of the product features and costs. Income payments and withdrawals from deferred annuities are generally taxable as ordinary income in the year they are taken. Eric Heckman offers investment advisory services through Heckman Financial and Insurance Services, Inc., a registered investment advisor. Any tax advice given as part of this presentation is not intended to be used and cannot be used by the taxpayer for the purpose of avoiding tax penalties or promoting, marketing, or recommending to another party any matter or transaction addressed herein. The views and opinions expressed in the program are not necessarily those of the radio station or its sponsors, and they should not construe as legal, tax, or investment advice. You should always consult the appropriate advisor before making any financial decision.